relating to the registration. Here, the registration. So the people who are supplying the goods or services as per the section 22 of the Act shall registered under the GST law. Whenever the person gets registered under the GST, he will be allotted a unique identification number called Goods and Service Tax Identification Number. So, in uh, abbreviation, it is called as GSTIN number. By GST authorities, it will be issued. Now, that means this number indicates the person is legally recognized as a supplier of goods and services or both. The recipient of this registration on behalf of the government, he can avail input tax credit, whatever he has paid on inward supplies. There is a threshold exemption limit also for the registration. Like in a financial year, aggregate turnover will be taken into the account. Based on the aggregate turnover, uh, if it is exceeds 20 lakhs, he shall get registered under the GST. Like let us say in northeastern region states like Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh, and Uttarakhand. If these are the states where people, if their aggregate turnover threshold limit is only 10 lakhs. Other than these areas, they are supposed to exceed the aggregate turnover 20 lakhs. Then what is aggregate turnover? Now, as per the section 2, subsection 6 of the law defines or means aggregate turnover is the aggregate value. Aggregate means total value of all taxable supplies, exempt supplies, exports of goods or services, interstate supplies, and all supplies made by the taxable person, whether on his own account or made on behalf of his principals. So, all these put together will be called as an aggregate turnover. Now, you have to take certain precautions also into the account that what is not included in this aggregate turnover. First thing is, aggregate turnover does not include the value of supplies on which the tax levied on reverse mortgage, reverse charge. So, whatever which is charged on reverse charge will not be included under this aggregate turnover. The value of inward supplies will not be considered. Central tax, state tax, union territory tax, cess, etc. will not be covered under the aggregate turnover. And they also see to it what all you are putting into the total, the computation on all India basis in a financial year. You cannot exceed the financial year. You cannot go beyond the India. So whatever the business has been done within India, within a financial year, that should be calculated. And the person having with same pan, that means whatever the same pan with the two persons, even those will be treated as only one. Okay, they will not be treated as separately. So in such cases, you have to exclude these things, and you have to take only the aggregate turnover into the account. So first of all, they have to compute what is aggregate turnover. They need to see to it whether it is crossing the threshold limit or not. If they are crossing the threshold limit, then they have to see in which place, other than the northeastern states or the other states. Northern region states, eastern states, if their turnover exceeds 10 lakhs, so they have to register under GST law. And other than these, they are supposed to register uh, under the GST law. Now, the person's not liable to register even though the aggregate turnover is more than the threshold limit. So here there are certain people who will not be considered to be registered under the GST law. One is a business is exclusively engaged in making taxable supply or taxable supply on which the tax is payable under the reverse charge mechanism, or an agriculturist. He may be an individual or an HUF or involved in the cultivation of a land. He may be a labor, he may be a owner, he may be a family, he may be a servant on wages payable either in cash or in kind or hired a labor under the personal supervision of his own or any member of his family. In such cases, these people are not eligible to be registered under the GST law to register themselves. Next, what are the instances where a compulsory registration can be followed or a voluntary registration? So there are two types of registrations we have. One is compulsory registration and another one is voluntary registration. Now, coming to the compulsory registration, here they say the person who were registered under earlier laws, so they are, first of all, that means they might have already doing the business registered under the VAT Act or excise or a service tax, whoever may be, they are all liable to get registered under the GST Act. A person already registered under the previous laws is migrated to GST through a provision, so that person is required to be registered under the GST Act. Next, interstate taxable supply of goods. So the persons who are doing interstate supplying of goods, it is compulsory for them to get registered under the GST. And there are the instances also where this clause is not applicable for those who are supplying handicrafts of the goods between the states, or who are services between the states, or the job worker in case the jewelries, goldsmith and silversmith, these people doesn't include in this. The next is transfer of business. The business which is carried on by a registered taxable person is transferred to another person. In such a case, the successor or succession supposed to be registered under the GST law. Maybe on account of a merging of a business or an amalgamation of business, whatever may be the instances, once a transfer has been taken place to a successor, then he is supposed to be registered under the GST law. Next, e-commerce operators. The e-commerce operators, like we have now, so many operators are there, like Flipkart, Amazon, Paytm Mall, Snapdeal, etc. People who are supplying the goods on e-commerce platforms are required to be get registered under the GST irrespective of their threshold limit. That means for them the threshold limit is not applicable. They have to be registered under the GST law. The next is about the persons who required to deduct tax at source. Now, as per the government order, there are certain following entities may need to deduct the taxes at source at the rate of 1% on the payments to the suppliers of taxable goods or services. They may be individual contractors exceeding 2,50,000 as their total value of supply. They can be a department or an establishment of a central or a state government, local authorities, government agencies, any authority or a board or any other body set up of an act of parliament or a state legislature or established by any government with 50% or more equity or control, the society established by the central government or a state government or any local authority or a public sector undertakings as notified in the latest notification dated 13th September 2018. Now, a tax deductor at source should compulsorily register under GST without any threshold limit. And the next is a casual taxable person making a taxable supplies. Casual taxable person. Who can be called as a casual taxable person? Usually, a person who is supplying the goods casually means any occasion, like for occasions like Vinayak Chaturthi, whatever the ideals of the Ganesh is being sold, only for that festival purpose they will be selling it. So it's a reason why he will be called as a casual taxable person. Or Diwali crackers, he will be only for that festival only he'll be supplying. Like Rakhis, he may be supplying only for that. So he is a person who is acting as casually. He is not doing regularly this business. That is 365 days. He will not do this business. But occasionally, taking the occasion as a base, maybe he is doing the job. In such cases, that person will be called as a casual taxable person is the one who supplies taxable goods or services occasionally in the state or union territory where he does not have any fixed place of business. He should not have a fixed place of business. He may be acting as a principal or an agent or any other capacity to supply such goods or services for the furtherance of the business. So such person cannot opt for composition scheme and he must apply for registration at least 5 days prior to his commencement of his business. So before you want to commence the business, he has to apply for registration. And a non-resident taxable person making a taxable supplies. Non-resident person is the person is not resident to particular place, but he may be resided in some other place. So the non-resident taxable person is the one who occasionally supplies taxable goods or services in a state uh, where GST applies but does not have any fixed place of business in India. So he will be called as a non-resident. Then person supplying online information from outside India. The person supplying online information or a database access or retrieval services or DR from a place outside India to a person in India is required to get registered under the GST, irrespective of their threshold limit. The audio services, so it is an abbreviation that is uh, online information and database access or retrieval services are the services which are delivered from the internet, Google Drive, providing a cloud services, streaming providing digital distributions, platforms for video games, Amazon Prime Video, ebooks, movie via internet, web services, providing trade statistics, legal and financial data, etc. However, the lawyer and the financial consultant services through email, ticket booking for entertainment events, professional courses like education, delivering the content by a teacher over the internet, etc., do not come under the ODR services. So, other than this will be considered and they are supposed to be registered. Now, coming to the next is procedure for registration. we need to discuss about the procedure for registration. Now, the registration under GST is PAN based. The suppliers are required to register in each of the states from where he supplies his goods. Now, first, verification of details. So, the person who wants to register under the GST needs to fill GST registration 01, which is applicable or which is available on GST portal or any facilitation center. The person has to declare his PAN, a mobile number, email address, state where he stays, and all these details are supposed to be filled in part A of the form. After the successful verification of PAN, mobile number, and email ID, a temporary reference number will be generated and sent to the mobile number and email address of the applicant. Then, after due verification has been done, an application for registration to be submitted. So, TRN, temporary registration number, which is received, the applicant shall submit the application in Part B of the form GST Registration 1 along with the required documents. What are the required documents? PAN of the applicant, Aadhaar card, proof of registration of business or incorporation certificate, address proof of the place of business, identity and address proof of promoters, directors with photographs, bank account statement, cancelled check, digital signature, letter of authorization, board resolution for authorized signatory. All these are the documents need to be submitted on GST portal. The Part B of the form has 10 sections, namely business details, promoters, oblique partners, authorized signatory, authorized representative, principal place of business, additional place of business, goods or services, bank accounts, state specific informations and verifications. All these are supposed to be filled. Once all these data are being completely filled, you have to submit the application. Once the application is submitted, an acknowledgement will be received which contains an application reference number which is issued by the applicant in the form of GST registration 02 through a registered email address and the mobile phone number. So every person who is liable to be registered under GST shall apply for registration within 30 days from the date on which he becomes liable to register. A casual taxable person or a non-resident taxable person will apply for registration at least 5 days prior to their commencement of business by depositing an advance amount equivalent to the estimated tax liability of such persons for the period for which the registration is sorted. Now, we need to see a separate registration is also required in following cases. What are those cases? 1. Special economic zone unit. A person, he may be owns a special economic zone or he may be a special economic zone developer or input service distributor or a person required to collect either a TDS or a TCS, that is tax deducted at source or tax collection at source, or a person supplying online information or a database access or a retrieval services. These are the persons has to get a separate registration along with the normal whatever, if they are linked with these kind of business, they have to again separately get need to be registered. So who are they? One is he may be owning a special economic zone, or he may be a special economic zone developer, or input service distributor, or he is authorized to collect TDS or TCS, or online information and database access or retrieval services. These are the people, along with the normal business, supposed to get registered under the GST. Scrutiny of application. The next point which we are discussing is the scrutiny of application. Here, the application will be forwarded for verification for the proper officer. So, proper officer will do the verification. He will examine the application with accompanying whatever the documents which you have been uploaded. And if the same found to be correct in order, and then he approves the grant for registration within 3 working days from the date of submission of an application. So as soon as you submit the application, within 3 days, he can grant the registration certificate, provided he satisfies that whatever you have submitted is in order. In case if any deficiencies are there in the application, the proper officer may send a notice to the applicant electronically, that is in form GST registration 03, within 3 working days from the date of submission of your application. The applicant shall furnish the clarifications and any other information as required electronically in the form GST registration 04 within a period of 7 working days from the date of receipt of such notice. If the proper officer is satisfied with the clarifications provided, he may approve the grant of registration to the applicant within a period of 7 days, 7 working days, from the date on which such clarifications he has received. Or if the applicant fails to provide any clarifications, then the proper officer is not satisfied with those clarifications provided, then the proper officer may reject such application and inform the applicant in form registration 05 under GST. If the proper officer fails to take any action within 3 days from the date of application or within 7 days from the date of furnishing clarification in case of deficiency, application for grant of registration is deemed to have been approved. Now, once it is deemed to be an approved, or it is the proper officer is satisfied, then he will start issuing the registration certificate. So, the applicant provides or submits the application. Once the application approved, verified by a proper officer, and he satisfies with all the details, then he will grant the registration, and that is in the form GST registration 06. So, certificate of registration will be in the form GST registration 06. And it is made available on the common portal. Now, what is GSTIN number? I told you already a temporary number will be issued before to issue the GST registered number. Now, it contains a 10 characters. Prior to GST, all registered dealers under VAT were allotted a unique tax identification number. Under the GST regime, the state-wise 15-digit unique code which is being allotted under the goods and service tax identification number. The first 2 digits represents the state code of Indian Census 2011. Next 10 digits represent the PAN. 13 digit represents the entity number of the same PAN holder within a state. 14th digit is Z by default. The last digit is to check code to verify whether the information on the barcode is correctly entered or not. So this is what a 15-digit number is being stated. Now, unique identity number in lieu of GSTIN, a special category agency of UNO or any multilateral financial institutions or an organization notified under United Nations Privileges and Immunities Act shall be granted a unique identification number instead of GSTIN. Now, coming to the effective date of registration and the validity period. Now, coming to the registration, from the date on which the person becomes liable to register, if the application for registration has been submitted within 30 days from the date he becomes liable, application has been submitted after 30 days, registration is effective from the date of the grant of registration. And registration is on permanent basis until it is cancelled. However, in case of a casual taxable person or a non-resident taxable person, registration is valid for a period specified in the application of registration or the 90 days from the effective date of registration, whichever is earlier. Now, coming to the period of 90 days may be extended by further period, 90 days by a proper officer only. Now, coming to the state-wise registrations, if you take into the account, the aggregate turnover for the same PAN, if it is computed on in all India basis, for the purpose of determining the threshold limit or exemption, that is being done state-wise. A multiple registration within the state is also will be taken into the account. They can have a separate registration for each business vertical at his own discretion, subject to the following conditions. What are the conditions he has to take into the account? One is business vertical of a taxable person shall not be granted registration under composite scheme. The next, supplies between business verticals of such taxable person in the state of union territory, state or union territory, subject to the GST or a tax invoice shall be issued on such supply. These are the things to be considered. Next, we have a voluntary registration. The person who is not liable to register otherwise can also opt for a registration. Whatever the provisions which are applicable to a registered person shall also apply to such person under such case. Now, suo motu registration also is there, which means a pursuant of any survey or inquiry, inspection, search, or any other proceedings, the proper officer finds that a person liable to registration failed to apply for registration, then officer may register the said person on temporary basis by issuing a temporary reference number and an order in the form of GST registration 12. And this registration shall be submitted with an application within 90 days from the date of grant of such temporary registration. Now, there are certain exceptions to the PAN-based registration. What are those exceptions? One, they say that a person was required to deduct the tax at source under section 51 can register using tax deduction or a collection account number. Such person shall submit an application for registration electronically in the form GST registration 07. A non-resident taxable person can apply for registration by using a valid passport, and he can submit electronically the form GST registration 09. Amendment to registration. Now, in case of any charge in the particulars provided at the time of registration, the registered person shall submit an application for amendment in form GST registration 14 electronically within 15 days of such change. The proper officer within 15 days can electronically issue amendment order in form GST registration 15. In case the proper officer finds that the amendment soughted is not warranted, he may serve a notice within 15 days, and the notice will be served in form GST registration 03, which shall be replied within 7 working days, and that reply should be in the form GST registration 04. He may reject the application if the clarification submitted is not satisfactory. In case there is no communication from the proper officer within the time limit mentioned above, in such cases, application for amendment is deemed to have been approved. Amendment certificate made available to the registered person on GST portal. Now, coming to the amendment is possible under the following cases. What are those cases? 1. Change in legal name of the business, change in address of principal place of business or any additional place of business, addition, deletion, or retirement of partners or directors, karta, managing committee, board of trustees, chief executive officer, or equivalent responsible for the day-to-day affairs to the business. In case of a change of PAN of a registered person due to a change in the constitution of business, a fresh registration shall be started out in the form registration GST registration 01. Now, cancellation of registration is also possible in 2 following situations. 1. A proper officer on his own motion, he can cancel the registration, or on the receipt of application from a registered person. These are the 2 instances. The first instance is the proper officer on his own motion, he can cancel the registration when he deems it necessary to cancel the registration. Before cancelling, he will use a principles of natural justice. That means he'll give an opportunity of being heard to such person whose registration is being cancelled. One is the registered person has contravened the provisions of the Act is one reason, or a person registered under composition scheme has not furnished the returns for 3 consecutive tax periods. Next, a registered person has not furnished the returns for continuous period of 6 months, or a registration has been obtained by means of a fraud or a willful misrepresentation or suppression of facts. These are the reasons why the proper officer on his own motion can cancel the registration. Like second instances where a registered person he himself can apply for cancellation. That is, he has to apply in the form GST registration 16 electronically. The proper officer, once satisfied with such application, may cancel the registration. This cancellation is possible in one is either you are discontinuing the business or business has been transferred because of the death of the proprietor or amalgamation with other legal entity or a demerger or a disposal, change in the constitution of the business, taxable person no longer liable to register under the section 22 or section 24. Then whatever may be the reason to believe that the registration of the person is liable to be cancelled, the proper officer will issue a notice to such person in form GST registration 017, asking him to show a cause within a period of 7 working days why registration shall not be cancelled. If the reply to the show cause given GST regarding registration 18 is satisfactory, proper officer shall drop the proceedings and pass a dropping cancellation order in form GST Reg 20. In case the reply is not satisfactory, the proper officer shall issue a cancellation order in form GST RGE 19 within a period of 30 days from the date of application for cancellation or a reply to show a cause notice. Now, next situation is a revocation of cancellation of registration. Now, whatever the cancellation order was issued by a proper officer on his own motion, and any registered person whose registration is cancelled opines that such registration is not justifiable, he can apply to such officer for revocation of cancellation of registration in form GST Reg 21 within a period of 30 days from the date of order of cancellation of registration. However, application for revocation cannot be filed if cancellation is due to failure to furnish returns. Until such returns are furnished or the tax which is due is paid with interest, penalty, and the late fee with respect to such returns. If a proper officer is satisfied, he shall revoke the cancellation by an order in the form GST RGE 22 within a period of 30 days from the date of receipt of the application. If the proper officer is not satisfied, he shall issue a show cause notice in the form GST RGE 23. The show cause notice can be replied within 7 working days in form GST RGE 24. If reply to the show cause notice is satisfactory, he may revoke the cancellation within 30 days of the reply to the show cause notice. Otherwise, he will reject the revocation. Now, let us discuss about the compensation scheme. Now, for a small business people, to facilitate them or to relieve them for the tedious formalities of GST in terms of filing the returns or paying the taxes, etc., the composition scheme has been introduced. And their turnover during the previous financial year is less than 1 crore in other states, 75 lakh in special category states, can register themselves as a taxpayer under composition scheme and pay GST at a fixed rate of turnover. So, such suppliers or such persons under the composition scheme cannot raise invoice and charge GST on his supplies to the recipient. He shall pay the tax out of his own pocket. He cannot avail input tax credit. The person who buys from these persons under the scheme, we cannot enjoy input tax credit. Now, the applicable rates are for manufacturers and traders is 1%, restaurants not serving alcohol, etc., they will be charged 5%. Now, coming to the rates, the tax rates, we have seen that is 1% and 5%. 1% is given to manufacturers, 5% was given to the restaurants. And however, the scheme is not available for certain manufacturers who manufacturing ice cream or a pan masala or a tobacco products. They may be dealing with interstate supply. They are supplying goods through an e-commerce portal. Then service providers except restaurants for human consumptions not serving the alcohol. These people can not avail this composition scheme. Now coming to the next, that is levy of GST. Under that, first we have a taxable event. The taxable event here is an event happening of which resulting in levying of tax is called as a taxable event. So what is result of levying tax? That means either you are supplying the goods which are taxable under the GST law, or you may be providing the services which are taxable under the GST law. In such cases, that event has been, you're uh, providing or you are providing a service or supplying the goods. That is an event which has been happened. Therefore, it is called as a taxable event. Now, in case of a manufacturing of goods, taxable event is manufacturing of goods. Under service tax, you have to provide a service. Uh, Now, next we have to understand what is supply, what is goods, and what is services. And we also need to know who can be called as a taxable person. So, the taxable person means a person who is registered or liable to be registered under GST Act. That is, he is called as a taxable person. Or who is not liable to be registered but voluntarily registration under the GST law, then he'll be called as a taxable person. Or who is liable to be registered but not has taken the registration. So these are the persons to be called as a taxable person under the GST law. Then coming to the supplies, a supply by a non-taxable person to a non-taxable person is not subject to GST. They are not come under the purview of GST. Supply of a taxable person to a non-taxable person may be a subject to GST. That you also need to take into the account whether they come under the GST law or not. Then supply by a non-taxable person to a taxable person may be subject to GST under reverse charge mechanism. These are the things which we need to consider while supplying under the GST law. Now, yesterday already we discussed regarding to the supply. We already discussed what kind of a supply, that is, it should be made for a consideration for the course of business or the furtherance of business. It should be a taxable person, taxable supply, taxable within the territory. All this we discussed yesterday relating to the supply of goods, supply of services, that we have already discussed, right? Now, let us take up the next is about the place of supply. Now, um, the place of supply means the place of supply as referred to the chapter 5 of the Integrated Goods and Service Tax Act. This is a section which we have to consider into the account. That means place of supply referred in chapter 5 of Integrated Goods and Service Tax Act. Usually supply is a fundamental concept and all provisions under the GST revolve around the supply. There are three key elements we have to take, that is time of supply, place of supply and value of supply. These are the three key elements under the GST. Now, if we take the place of supply, two things to be considered. One is location of supplier and the place of supply. The location of supplier, that means a registered place of business of the supplier. That is the location of the supplier. Second, the place of supply. It is registered place of business of the recipient. These are the two things which we need to consider. Now, we have to determine the place of supply for intrastate supply of goods. Like assume a supplier of a craft products having their registered office in Bangalore, that is in Karnataka, supplying the goods to a schools which is in Manipal, again that is also in Karnataka. Hence, the supplier as well as the recipient are located in the same state. Therefore, this kind of a sale can be treated as, or a supply can be treated as intra-state supply. INTRA, intra-state supply of goods. Hence, SGST and CGST will be levied. Now coming to the place of supply for interstate supply of goods, INTER. Here, the craft products only will take into the account, who is having a registered office in Bangalore, Karnataka, but the recipient is in Delhi Public School, located in Jaipur, Rajasthan. So here Bangalore and Rajasthan, a sale has been or a supply has been taken place between a Bangalore and Rajasthan. Hence, you have to treat this as an interstate supply of goods. Hence, IGST will be levied. So, the provisions you have to determine the place of supply of such goods, the place of supply goods where the supply involves the movement of the goods, whether movement of goods involves or not, no movement of goods involves or not, export or import of goods under the place of supply. These are the three things which you have to consider for deciding where it is to be taken care of. So these are the things which we have to consider. First is location of such place of business, whether they have a fixed establishment or not, who is the supplier, where the supplier is located, who is the recipient and where the recipient is located. Whether both supplier and the recipient is located within the state, then it is called as intra-state supply. Whereas the recipient and the supplier lives in two different states and the supply is taken place between the two states, then that kind of a supply will be called as interstate supply. So these two things which we need to be considered. So interstate supply or intrastate supply, even that need to be taken care of. The next we need to discuss about the time of supply. So the time of supply, so we need to discuss both regarding to the goods and regarding to the services. These two we have to consider into the account. Now, whatever the liability to pay tax on goods shall arise at the time of supply. So they will consider the time of supply. Based on that only the levy of tax will be taken into the account. So now first, what are the things which we have to consider for the levying? The date of issue of invoice by the supplier should be taken, or the last date on which he is required to issue an invoice with respect to that supply. So either of this he has to take into the account. The date on which the supplier receives the payment with respect to that supply is also to be taken care of. Two things you have to take into the account. First one is the date of issue of invoice by the supplier, or the last date on which he is required to issue the invoice with respect to that supply. This is one. Second one is the date on which the supplier receives the payment with respect to the supply. The next we have to consider whether the supply is in respect of which tax is paid or liable to be paid on a reverse charge basis. The time of supply shall be the earliest of the following dates. Date of recipient of goods is one, or the date of payment as entered in the books of accounts. So whichever is earlier, we have to consider that. Or we can take the date on which the payment is debited from his bank account. Even that is also can be considered. Or the date immediately following 30 days from the date of issue of invoice, or any other document by whatever name called in lieu thereby to the supplier. So what you have to take into the account the time of supply, the clause A or the clause B or the clause C, whichever may be, uh, shall be the date of entry in the books of accounts. That need to be considered. The next we have to take into the account the supply of vouchers by a supplier. The time of supply you have to consider here is date of issue of voucher, which that supply is identifiable at that point. The date of redemption of voucher in all other cases. These are the two things which we have to consider in case of supply of vouchers by supplier for the time of supply. What are they? One is date of issue of voucher, and the another one is the date of redemption of voucher. The next what they say is for determination of time of supply, if it is not possible in such case, you have to take into the account a periodical return has to be filed, be the date on which such return is to be filed. So that you will be considering here, or whatever the date on which the tax is paid. These are the two things which will be considered if it is not possible to determine the time of supply. So what you're doing, one is the date on periodical return which has been filed is one, or the date on which the tax is paid. These are the two will be considered as a time of supply. The next, in case the time of supply cannot be possible to determine. The next, what they say is the time of supply to an addition to the value of supply by way of interest or a late fee or a penalty for a delayed payment or for any consideration should be, in case if it is to be collected, the date on which the supplier receives such addition in value. So whenever they receive addition value, those days you will take it as a time of supply. So here the time of supply, you have 6 points to be considered to determine what is time of supply. First point is the liability to pay a tax on such goods should be arised because of the time of supply is one, if you can decide what is time of supply. Second, in case the time of supply shall be earlier, then in such cases what you have to do, issue of date of issue of invoice is to be taken, or you have to take into the account the date on which the supplier receives the payment. Either of this you will consider as a time of supply. The next, in case the tax is paid or liable to be paid on a reverse charge basis, in such case date of receipt of the goods will take as a basis, or the date of payment as entered in the books of accounts. The next, the date immediately following 30 days from the date of issue of invoice or other document by whatever the name called in lieu thereof by the supplier. The next, if it is not possible to determine the time of supply, so in such cases, what they'll do, date of entry in the books of accounts of the recipient of the supply will be taken as a basis for us to treat it as time of supply. Or supply of vouchers by a supplier, either the date of issue of voucher or a supply identifiable at that point, or a date of redemption of voucher in all other cases. The next, what they say is a periodical return or the date on which tax is paid may be the basis for you to determine a time of supply in case previously if it is not possible to determine. The next, they say, like time of supply to the extent it relates. So, at what you have to take what is the total period of time of supply. In such case, whatever may be the value of supply paid in the form of interest, late fee, penalty for delayed payment, or any consideration shall be the date on which supply receives such addition in value, also to be considered as time of supply. The next, the time of supply of services. The liability to pay tax on services, it has to be determined according to the provisions of this section, or they have to take the date of issue of invoice by the supplier or issued within a period, or section 31, or the date of receipt of payment, whichever is earlier. Invoice is not issued within the prescribed period, then section 31 of the date of the recipient of payment, whichever is earlier. The recipient shows the receipt of services in his books of account. That date can be treated as a time of supply of service. Or in any case, the supplier of taxable services receives an amount up to 1,000 rupees in excess of amount indicated in the tax invoice. The time of supply to the extent of such excess amount shall be treated as the time of supply. And here the date immediately following 60 days from the date of issue of invoice or any other document by whatever the name called in lieu of by the supplier, even that is treated as the time of supply of services. So like this, time of supply and time of goods, you have to take the basic the conditions, or rather you say that what is to be followed need to be taken into the considerations. Accordingly we can determine what is the time of supply of goods or the time of supply of services. So with this we have completed till today. 6 units are over. Tomorrow we'll start with the valuation of supply, and the next unit we will discuss tomorrow. Hope you have followed. If you have any doubts, I think you can ask me now.